And just here to do a quick live morning update for you. We're going to run through what's happening in futures, talk a little bit about the combination strategy that I mentioned a couple times this week. Then we'll have a look at Forex, ETH, and Bitcoin, and then I'll let you guys get on with your day. I'm doing these updates a little bit earlier. I was doing them right before the U.S. session opened. Obviously now it's about 7:15 my time, 8:15 U.S. Eastern time. Trying to do them a little bit earlier for a couple of reasons. One, just to give more time to really get prepared for the day. Secondly, I'm helping a friend with a project, an options trading room, and just need some time there to get those picks set up as well and do the interview with the trader, the options trader, so kind of get a jump on that market as well. So with that said, and I'll start sharing that information here as well as I get a stronger foothold and look more into what's happening with options. If I feel like it's something I'm comfortable enough in talking about and sharing, I'll do that. But until I have at least a decent level of knowledge to share some things with you, I don't really feel like it's necessary to share it here until I have something that I feel like I can add value from. There are a lot of great options guys out there. If you guys are interested in learning options, there's a couple of programs that you can look at. If you want to know about what they are, shoot me a message. I'll throw them in and reply to you. And we can go from there. So anyway, what's happening in the markets this morning? Well, let's start off with the futures market. We had a stimulus bill. Looks like it's going to pass. That should help some folks here in the U.S. As usual, the government seems to forget about small business. So, and small business owners and folks that work in those sectors, but we'll see what actually comes of it. Let's be cautiously optimistic. Anyway, what's happening over here on E-minis, starting at the top left hand side, on a 30-minute we are continuing to have a bit of an upward trend. Yesterday we had started an upward trend coming into the US session, into the regular trading hours for US, and it's continued on. We are seeing a bit of a pullback. So we broke through 2400 yesterday, which was a key point of resistance for us. After it broke 2400, we can see how 2400 was supported a number of times. So 2400 was resistance. It came to it, broke through, rejected it, and trailed off of it. So there was some opportunity to be made selling off of 2400 yesterday, which was counter trend trade. But then once it did break through and close above, we can see how that resistance point then became support for us. So we can see it was supported. And right now it's come down to 2400 and hit support as well. Now, one thing I'll caution you on is like we've said before, our 30-minute trend is mixed from our 4-hour. Our 4-hour trend is still down on this. So you've got to keep that in mind with whatever your specific trading strategy is. A lot of folks like to say, I only want to trade when my trend's aligned. If my 4-hour trend is in line with my 30-minute trend, I'm going to trade my 30-minute based on what's happening there. So if having the shorter term trend not being in alignment with a longer term trend is against your trading plan, don't push it. Don't rush it. The market's going to be there. Patience has a lot more value than trying to chase trades. Now, with that said, there are other opportunities, obviously, and we're going to get into those here in just a moment. We've talked about breakouts. We've talked about looking at bounces. And this week we've been talking about kind of a combination of those two. So once we run through key levels here, we'll come back and we'll talk some more about that combination process that I've been discussing over the course of this week and show you how that works a little more and talk about the pros and cons behind it. So anyway, 2400 seems to be supported here. We are in an upward trend on the 30-minute, which is countered the 4-hour trend. So do with that what you will. But right now, it's looking like 2400 is shaping up as support for us. So if we hit 2400, we may look to buy that bounce if you're trading with the 30-minute trend. Again, if you're waiting for trends to align, you don't do anything until either the 4-hour becomes an upward trend or the 30-minute turns to a downward trend. Same over here on crude. Crude's been chopping around quite a bit. Came down, that 22 seemed to be the low, repelled off of that and has pushed up as high as 25, a little over 25. Yesterday, we played around this 25 area. Today, in off hours, it's broken back below 24 and looks like we may be just getting ready to cross over here. So that 30-minute trend, when it crosses over, will be in alignment with the 4-hour. So at that point, we could either look for buying the pull or selling the pullback off of 24, or set a breakout area down here. Look to break out of a key level and sell it below that. At that point, once this closes below here, and our 30-minute aligns with the 4-hour, we would certainly be looking for continued shorts on crude. Gold is in an upward trend on the 30-minute. Has pulled back yesterday, came as high as 1700. 17's been a big point of resistance for us even before yesterday. We've hit 1700 and repelled off of it a couple of times, so yesterday was no different. Came up to 1700, repelled off of that, and then again in off hours trading came up to 1700 and repelled off of it. So gold though is still on an upward trend. We'd be looking to potentially buy these pullbacks. Now we were talking about and those are just ideas, by the way. I'm not telling you to do anything. I need to reiterate that. I haven't been reiterating that at the front of these videos lately, but I need to reiterate that. I'm not telling you what to do. I made a decision quite a few months ago to not give out trades. I'm not a CTA. I'm not giving trading advice. Just trying to give you some ideas of things that work, simple strategies that work, and ways to apply them. And that's what it's all about. You've got to come up with your own trading method. If you're constantly just following what other people are doing, you're never going to learn for yourself. And chances are in doing that, you're just going to keep jumping from thing to thing to thing to thing to thing, and you're never going to find consistency. Any trading method, all honestly, and I know there's so many people selling trading methods, and there's so many people selling indicators and products and things that promise you the world. It all comes down to odds and probabilities. Throw a freaking dart on a daily basis and make a decision on that dart. As long as you've got good money management behind it and you've got a take profit that outweighs your initial risk, mathematically you're going to end up coming out ahead. Honest to God's truth. I wish there was more to it. There's not. So anyway, I'm not telling you what to trade. I just want to reiterate that I'm not telling you what to trade. I'm giving you some ideas around ways you can approach the market, and some simple ideas around ways you can approach the market. Simple ideas combined with money management and combined with a consistent application mathematically result in success. And that's, you can't fight math. We're the ones that get in the way of math. You and I get between the math by taking chances that we shouldn't be taking, risking too much on trades, forcing trades that aren't really according to the plan, so on and so forth. So anyway, okay, soapbox time over. Let's get back to this stuff. So over the last couple of days, we've been talking a little bit about a combination of a breakout and a bounce, right? Remember, breakout strategy we talked about a few weeks ago. You can go back and find those videos here on Facebook or on YouTube, and you can find those videos. What a breakout strategy is just simply looking for key areas on a certain time frame where price has been trading within that range, and then you're placing a buy stop or a sell limit order to trade when price breaks through that area that you've identified, right? That's a breakout. A bounce is identifying key areas where price has stopped or struggled in the past. If you're in a downward trend, you'd want price to float up to that key area, then you would sell off of it. If you're in an upward trend, you would want price to float down to a key area and you would buy off of it, right? That's a bounce style strategy. And this week I was just talking about the fact that there's kind of a good combination of those two, which is, looking at a trend on a higher time frame and then doing that combination of a bounce or a breakout. And what I mean by that is, let's say, for example here, let's use crude actually today as an example. I think I used gold yesterday. Let's use crude. It's a little more active. So let's just pull this out like this and talk a bit about crude. So, looking at what's happening on a different time frame. So let's say you're looking at a 30-minute time frame and then applying that trend to what's happening on a 5-minute. Or you look at what's happening on a 4-hour and you say, okay, my 4-hour trend is down. Then on a 30-minute, you'd be looking for selling opportunities based on this trading strategy. So, let's say on a 30-minute, we've got a downward trend, and we go over to an M5 and we apply that trading strategy. So, for example, over here we can look and we can see, well, let's just look at yesterday. Coming into the day, we were starting to trend down on crude. So we'd look at a 5-minute. Let's go over here to the 5-minute for yesterday. So that combination strategy, when you're in a downward trend, what you would look for is pullbacks. So you're looking for a pullback, and then you're placing a breakout around that previous bar, right? So if we're in a downward trend on crude and price is pulling back up, then, and you want to do this during times that are volatile, right? Regular trading hours. I don't know that you'd really want to do this during off hours. So, regular trading hours, any time you're trading, you want to trade when you've got good volume behind you. So take that, do with it what you will. I feel like it's a better time to trade when there's actual volume in the marketplace. There's less opportunity for kind of whippy style moves. So anyway, and I'm running short on time. I need to wrap this up. But if we're in a downward trend on a 30-minute, we'd be looking for selling opportunities on the 5. So as price floats up, we'd be looking to say, okay, well, price floated up here. Let's see what we can do. So the next bar, maybe, so this one didn't close down. So this gives us an opportunity. So we look to place a selling order here, because remember we're selling. We're looking for selling opportunities. So this is floated up. We would place a sell order here at the bottom of this candle and a stop loss at the top. Next candle, as it opens, so as this candle opens, we're placing our sell and our buy. So our sell order and our stop loss here. It breaks through and it fills the sell order. Now you've got two things you can do here. You can either, one, just simply have a static stop loss and say, well, this was just eyeballing it here. Let's say that was about 20 points. So we can look at this and say, okay, my distance from entry to stop loss, my risk is this. I can look to take profit if we get to 2x that, so set it for 2 to 3x your initial stop loss and just have it static. That way, every time you win, you're winning 2 times what you're risking, right? So you could do that, or you could trail the stop. Either way, just understand that when you trail the stop, you're going to sometimes have really outsized wins, but very often you're going to end up with small losses and typically smaller wins. So it's going to dilute your win-loss ratio. It's also going to dilute the amount that you win when you win. But that's another consideration you've got to come to when you're looking at a trading plan and thinking through what your trading plan might be, is what are you comfortable with? Some people want to move their stop loss frequently and ratchet off risk. Other folks would rather see consistent wins that are greatly outsizing their initial risk. So keep that in mind. But anyway, just to look at this, what we'd look at here is you've got your stop loss, or you've got your sell entry down here, your stop loss here. Price breaks through as the new market session begins, fills this, and if you're trailing your stop, you would trail it at the top of each previous candle, right? So you would have gotten down to here, this would have taken you out. So it would have taken us out. If you're trailing the stop, it would have taken you out. So we'd be out here with a pretty decent win on that one. Then, price comes down, it stops, it starts to pull back again, and same process again. You'd put your stop loss, or I'm sorry, you'd put your sell entry down here, you'd put your stop loss up here, price breaks through, fills this order. If you're trailing the stop, you'd get down to about here, you'd have a small win off of what that distance between your entry price and where you trailed out on your stop. Or if you had a 2-to-1 risk ratio, it may not have gotten there on this one, although it might have gotten there on this one. Just doing the math, looks like it would have gotten down here if you're doing a static 2-to-1 risk ratio. If not, trailing stop would have locked in a little bit of profit there. Eventually, you're going to get to one of these where you just simply don't see that. If you're trailing, you don't see there's going to be a number of opportunities where if you're trailing your stop, you end up breaking even or taking a small loss. If you're not trailing your stop, there's going to be ample times where it comes near where that take profit might be and reverses off of it. But ultimately, that's the strategy. It's a combination of a breakout and that bounce. So, what we're simply doing is looking for that longer term trend. Well, oops, where's my screen? There it is. So, what we're doing is we're just simply looking for a trend. We're identifying on whatever time frame is a little bit larger. So if we're going to trade an M5, we might look at an M30. And we're saying on the M30, our trend is up. Our trend is down. Then we go to an M5 and say, okay, based on what's happening on the M30, I only want to look for sell orders. So as price floats up, I'm going to look to find opportunities where I can sell it off of those candles, right? If we're in an upward trend, we're going to look for pullbacks on an M5, and then we're going to look to buy opportunities off those candles. Super easy strategy, really, really easy to implement, especially if you utilize, where's that screen? Dang it. Well, I can't put it on here. I have a different thing running. Let me see. Especially if you utilize the advanced breakout EA. So if you're trading on MT4, you can use that advanced breakout EA. And this thing, you can do the same thing on foreign exchange as well. Just find a volatile instrument. You can utilize the, since I'm running short on time, I want to just pull this up real fast. You could utilize the currency strength meter to see which currencies are actually moving and pair those together, and then you've got the volatility that you're looking for and run the exact same strategy on foreign exchange. Forex, doesn't use, well, a whole discussion for a different time because I'm really seriously running short on time here. But if you utilize that advanced breakout EA, which is available in the tools area in the members, and you can make money from your laptop members area, and you can run that strategy utilizing that advanced breakout tool, and that way you can very quickly move your lines where you want them as new candles form, so that you're able to take advantage of those breakouts off of those smaller candle sizes. Automatically calculates your risk for you, automatically calculates your lot size for you, does everything. So good way to go. Forex, we're consolidating right now. I think you saw that over here on this screen. Markets have opened. We had kind of a big move on the pound when things were first getting started into the new U.S. trading session, which opens at 8 a.m. U.S. Eastern Time for foreign exchange. Remember, the stock market comes online at 9:30 Eastern Time. But out of the gate, pound was moving, but a lot of our currencies are consolidating right now, so there's not really any opportunity for us as it stands at this moment. Over here on this screen, just looking at Ethereum and Bitcoin, they've both flattened out. We're still in a downward trend on ETH. We're still actually in a downward trend on Bitcoin as well until this 4 hour for me until this 4-hour cross is over, I'm still looking at potential short opportunities here on both of these. So we'll see where that goes. Although with that said, ETH, did cross above a key level over here at 135, and it's bouncing off of that right now. So counter trend trade would be to look for a bounce off of 135, but that is counter to what that trend is. Really, with things flattening out like this, honestly, a breakout may be a better play. We may get some momentum, and we don't know which direction, right? The trend is down, but we don't know which direction this is going to go. It's been flat here for quite a while. Looking for a breakout might be the better play on this, just in case we get a really good momentum burst long. You wouldn't want to be left behind. And the same over here on Bitcoin as well. We're hitting kind of this top level at 60, basically 6,800. It's hit it, and it's been struggling here for a while. There may be opportunities to look at a breakout above 6,800, or sell opportunities off of 6,000, just depending on what it does. But until this crosses, for me, the trend it's looking like we could still go shorter on both of these instruments, but remains to be seen what's going to happen there. So anyway, I got to go. I'm running out of time. I need to get this other thing going so that I can learn a little bit about some options plays this morning. So I'm going to hop onto that call and leave you guys with it. If you have questions, shoot them to me. Oddly, so support at makemoneyfromyourlaptop.com goes to spam. And I actually replied to somebody the other day, and their ESP totally rejected my email. I got a message back saying, "Yeah, we're not gonna deliver your email. It looks like spam." It was a reply to a message that somebody sent me. So I don't, for the life of me, know what's going on there. If you're messaging me, I have replied. Hit me in Facebook. I'll see the messages there. All right, so that's it. Have a great day.